video, I'm going to be covering the Breakout 2.0 strategy. I put all the requirements right here on the left screen so that you guys can see each step. We'll go over each step one by one so that you guys understand the logic behind each trade, and it'll go from there. So looking at the first requirement, first you want to confirm the overall trend on the 10-minute, 30-minute, and 1-hour time frame. So with that said, right here on the 10-minute, you can see that price is above the pivots are angling up, and the trend meter below is green. So this is going to indicate that we're in a bullish trend, where you can assume that price is likely to continue to the upside. Once you confirm this, move on to the next time frame, 30-minute over here. You can see that the same thing is happening on this screen as well, right? Price is above the pivots are angling up, and the trend meter down below is green. So once you confirm that, you can move on to the 1 hour, and you look for the same thing here. Price is above the pivots, trend meter is green, and the pivots are angling up. So once you confirm that, you can pretty much assume that price is likely to continue pushing up, because you can see from the shortest time frame to the highest time frame here, price is going to the upside. So odds of it continuing to the upside in the near future is very likely. So once you confirm that, you can now maximize the 10-minute time frame, because this is the only requirement that requires you to look on 3 different time frames to confirm the overall trend. So once you've confirmed that, moving on to step 2, now you want to confirm the direction of momentum. So you know that price is going up with regard to trend. Now you want to make sure that momentum is continuing that direction so that you can just, obviously take a buy here and then ride that wave to the upside. So second requirement over here, you want to confirm the direction of momentum. Looking back at the most recent momentum signal, we have a buy signal here indicating that momentum here is bullish in conjunction with the overall trend that is also bullish. So once you have that lined up there, you can pretty much assume that, if you take a buy here, price is likely to continue up and reach a profit target. So once you've made that assumption and you've made the confirmations here with the first 2 requirements, you can enter on the open candle in the direction of momentum. So this strategy is basically entered on the open of market, which is 6:30 a.m. Pacific time, 9:30 a.m. Eastern time, if all the requirements are met. So if you confirm that the overall trend is bullish, the overall momentum, well, just the 10-minute here specifically, is bullish as well, you can take the assumption that if you take a buy here, price is likely to continue pushing up and likely hit your TP. So for the TP stop loss, this is where it becomes a little subjective, because you want to gauge the previous movement pre-market here to see whether price is going to push higher up to 1,500 pips, or it's just going to push to 1,000 pips. Looking over here on London Open at midnight, you can see that price is pushed up about 1,500 pips. So the odds of it continuing to push up the same amount during New York session is very likely. So for this example here, we are going to use a 1,500 pip TP stop loss. This isn't always going to be the case, but for this specific example here, we're going to use 1,500 pips because you can see that the volatility here lines up. Depending if you want to use 1,000 pips or 1,500, it's really up to you. But as you continue to apply this strategy, it'll all make sense, and you'll start to be able to gauge the movement pre-market. So with that said, we have everything met here. First requirement, confirm overall trend, obviously bullish, confirm direction of momentum, obviously bullish, enter on the open candle in the direction of momentum, which is a buy. So you take a buy right here, and then you let the trade run. You can see here that price kind of retraces back a little bit, which is typical, right? Price opens right here, crazy movement on open, and then price starts to bounce back and forth. This is why you guys want to have a wide TP stop loss to have some cushion in case this happens. So you can see price is kind of going back and forth, but eventually price starts to make its way in our direction. And if you just hold on to this trade for, X amount of time, eventually it pushes up and hits your profit target right there. So as you guys can see, this strategy is very simple. There's not really much that's required to confirm this movement. You just got to make sure that everything here lines up. And then when everything lines up, you can take the entry. Just make sure that you use proper risk so that you guys can, manage your risk properly. You're not over leveraging. If you win or lose the trade, it's not going to make a big deal to your account. But it will give you some cushion to start off the week if you take this on a Monday like we did here. So if you guys have any questions, feel free to reach out. You guys can email me, Shawn@KodiKaiTrades.com, or you guys can message me on Telegram @KodiKaiTrades. Otherwise, I'll see you guys in the next video. So see you guys next time.